Welcome to the What to Watch video update. This is the last video that I do each week, where I do a daily video, a weekly video, an intermarket analysis video. The video right before this is the deep dive video, where I talk about charts that maybe aren't as blatant right now, and we have to look deeper into those. And then the last video is what I call the What to Watch video. And these are positive and negative things that seem to be really speaking right now, and it's what I'll be watching as the week begins. Then there's another area of just things I'm watching. They're not necessarily positive or negative, but just areas that we want to observe to see if we're getting any changes in those areas that can ultimately impact the S&P 500. This is being prepared for Monday, December 2nd. Before I get into the video portion, I want to tell you about the SPX investing program. If you want to go see the program, there's a link that will take you to the website. There's a link that will take you to a video. If you have any questions, you are more than welcome to send me an email here with the address that's provided. Also, as I mentioned, the videos around the outside, these are weekly videos. Well, supplemental videos, I do those on an as needed basis, but everything is meant to tie into the daily video. Okay, let's go through and look at some of the positive things. Now, as with all of the charts here, it may be on the positive side, but there may be some negative things that we're keeping an eye on. Just like when we get to the negative portion, there may be negative things, but there are positive things that we're also keeping an eye on. Okay. First of all, we are in a period of positive seasonality. This is put out by Stock Traders Almanac, and it shows that the Tuesday before Thanksgiving up until the second day of the new year, we've been positive going back to 1950. We're up almost 80% of the time with an average return of 2.58%. The median is 2.4%. We're up 59 times, down 15 times. So it's not 100%, but it's still a high percentage of times, with the average win being 3.78%. When we are down, the loss is 2.13%. And then over here on the right-hand side, I won't go through these numbers, but this is the Russell 2000 small cap index, where it tends to do quite well. And we're coming into the what's called the Santa Claus rally that starts about now, maybe a little bit later in December, and then usually will carry through into January. We saw that a year ago, especially with the small caps, where they were just doing really, really good. And then it just stopped and they started giving back all of their gains. So we're waiting to see if that will happen. Now, I don't do the small caps myself. I don't do the indexes. I don't do any small cap stocks. I do the S&P 500, but we keep an eye on all these other indexes because they can impact the S&P. Okay, here is the chart for December as far as seasonality, where we tend to start off pretty good, going a little bit higher. Then we hit some choppiness as we get a little deeper into December. And then we do have the Fed meeting coming up here, and we tend to see positive seasonality. It's not always up days, but you can see this red dashed line here. This is the small cap index during an election year. And so a lot of folks are really anticipating that. Sometimes it's also referred to as the January effect, where the small caps really outperform. And it usually starts at about halfway through December, but we can see that things are improving with the small caps right now. Again, what I focus on is the green dash line here, which is the S&P 500 during an election year, where we do have some positive seasonality going through the month of December. We're also looking pretty good here as far as sentiment. We're above 50 and going up for the most part, and so we tend to go with that. When we start to change our mind is if we get above 75 or around that 75 level, and this keeps going up, that means the market's getting a little too excited about things, and we tend to use this as a contrarian indicator. And then if for some reason if we go down and we get down to this 25 level, that's where we start to see a lot of pessimism in the market. And that's when we start to, again, use it as a contrarian indicator to look at, okay, maybe we've hit a bottom now. But for the most part, we're going up with this right now. We tend to roll with that as it's going up. So we're more positive as far as sentiment is concerned right now. Here's the intraday chart going back to Monday's session. Now, it was an abbreviated week because of the market being closed on Thursday for Thanksgiving, and then Friday was uh, they closed quite a bit earlier, but it ended up being positive anyway. Didn't get a really good start. Now, we did gap higher in Monday's session, but then there was a concern. We saw a lot of selling into strength. We hit this R3 level. That was the high for the day, and then selling, selling, selling. What was more encouraging on Monday and what helped to turn things a little more positive is we came almost down to this solid blue line, which is the daily pivot, and we were able to bounce up off of that. Now, we didn't see an awful lot of strength, but we did see some buying into weakness here, and we were able to hold on to those gains. Then on Tuesday, things were more positive. We actually gapped up, saw some initial selling, and then we're able to close just a little bit off of the high in that day. So that's when things really started to look more positive. Then on Wednesday, we ended up being down because in Tuesday's session, we were starting to get a little overbought in a very short term sense. And so we worked some of that on off on Wednesday. And then Friday is where we really broke out and set some new gains. We did see some selling going into the close, but were above this R2 level until we did close in Friday's session. So we were up on the week and it's looking pretty positive. This is what I follow during the day. It's a 10-minute candlestick chart here. And I don't day trade, but I do follow this. You can get some clues as to what's happening in the market, especially when we have a strong open and then we see a lot of selling and then the smart money comes in and starts doing some buying here. We can watch that as it unfolds and that gives us a general feel for how things are actually behaving with the S&P 500. And here's a daily chart. We're looking pretty good here. We were able to get above this dashed line that may be a little hard to see. We now have the new pivot points that will last for the whole month of December. And we do have the R1 level above our current price. So if we could keep going up, this may end up acting as overhead resistance. Now there's a thing called a P right here. That's the daily pivot. And when we're above that, we're more positive. When we drop below that, we're more negative in a general sense. We're above this pivot as we begin December right now. So we're looking more positive this way. And then on the bottom, we really dropped off as the week unfolded as far as volume. And not a real surprise because it's a holiday week. Now, we are seeing the beginning of a new trend. Hasn't quite been confirmed yet. And of course, it may take a few days for this to play out. But this is called the ADX, the average directional movement. And that's the dark black line that you see here, where it had been coming down. Now it's starting to turn back up. And I also plot a moving average on here just to give it a little bit more context. We're crossing above the moving average. That means that the trend is getting stronger, but we're not necessarily in a trend yet. You see this line, this blue line that I have right at 20, and other folks will use different levels, maybe 25, maybe 30. I use 20. That's what I found works for the S&P. When we have a confirmed trend, it's when the black line goes above 20 and it's above its moving average. That means we're in a trending environment that's getting stronger. Then we look at the green line and the red line to determine positive from negative. And with the green line on top, that means we're positive. So if we keep going up with the S&P, we will probably cross above this 20 line, above the moving average. The green line will continue to go up, and that would be the beginning of a new short-term trend. Then we see that same thing here on the intermediate term. And this is the chart that I really focus on. I tend to focus more on the intermediate term, and then I look at the short term and then long term to give context to the intermediate term. But we're also coming up with the ADX. We're coming above the moving average, but we're not above 20 yet. So we're seeing pretty much that same thing that we saw in the short-term chart. And we also see where the green line is above the red line and going up. So the intermediate term trend could be starting now and actually show some strength, and it's looking positive. Now, to give this an even bigger picture look, I included the weekly chart of the ADX or average directional movement. And we're seeing something kind of interesting here, which could play out to be positive in that we were really showing a weakening trend here. The dark black line was coming down below the moving average. We never did go below 20, but now we're starting to turn back up and cross above the moving average. And the green line is also on top here. And so we're seeing some confirmation. see if it plays out like this. But we have the short term and intermediate term based on daily charts. And now we have the weekly chart also starting with a new trend as well. And we, right now anyway, would default to positive. So we're seeing these things coming together, and that could be really strong for the market. When we look at the moving averages just on the S&P 500 itself, we're getting a little extreme here with the 20 period exponential moving average. We're getting above this blue line here, but we're improving with the 50 and we're pretty much flat to slightly going up with the 200. So this is short, intermediate, and long term also looking positive here just on the S&P itself. When we look internally inside of the S&P, we're setting all-time highs with the advanced decline line based on price and volume. So that's another internal measure that is positive. Also, another internal measure is new highs minus the new lows. Even though we really fell down here because of the short session on Friday, we're seeing an awful lot of green and not an awful lot of red. Not going with the Christmas theme, at least yet. But we are seeing a lot more new highs than new lows. And we're starting to turn up with our 5-day chart and we're going up with our 10-day moving average chart here. So this is another internal measure that's looking positive. Accumulation distribution, which I call a smart money indicator because it not only takes price into account, it also takes volume into account. And we look at the indicator itself, that's the blue line, and it's above the advancing moving average. That's positive. Then down below, I have a thing called the boom indicator, which tries, not perfectly, but tries to measure the distance from the indicator to the moving average. And when we get kind of far away from the moving average, we have a tendency to come back. And we're just on the border right now. Now, we could go higher than this. We could get further away than where we're at right now from the moving average. But this is usually a warning sign to us, at least that things might slow down. Then we look at the advanced decline ratio. Short term is 19, intermediate term is 39. We came down a little bit on Friday, but both the blue line and the red line are above zero. That's positive. And we're seeing an improvement. I was really pointing this out in previous videos that we were actually negative with the Chaikin money flow, which is another smart money indicator. Well, now this is looking more positive. The histogram, which are the green bars, they're going up, and the red line is going up as well. So another smart money indicator is looking positive. Now we're positive here, but a little bit concerned with our third smart money indicator, the Chaikin oscillator. We're above zero and going up. But you see how we're starting to roll over a little bit when we got up to this red line? We want this to turn and go back up for it to be more positive. If this continues to drop, that'll be more negative. Now, sometimes, not all the time, but sometimes this indicator will actually give us a warning before we start to see it playing it out in price. So this is a little bit of a concern to us that we're coming down, even though the S&P set a new all-time high on Friday. The vortex, we're also positive here, but a little bit concerned because we see the green line coming down and the red line, well, it's flattening out, but it's still coming up for the most part. If we cross here, that would turn this indicator negative. If we could turn back up with the green line, that would be more positive there. Then we look at the condition of the short-term trend. And my definition of a short-term trend is based on 20 periods. And then you use these really fast-moving averages on top of price, which is a double and a triple exponential moving average. And we're above both the blue line and the green line here. So this just suggests that the short-term trend is positive, and we see the price is above the lines and the lines are going up. So this gives us a little more confidence that the short-term trend continues to be positive. Then we look at a simple and exponential moving average based on 20 periods, and we're well above both of the lines. We also see where the blue line is above the red line. That's the exponential, and it moves faster. So when we see the blue line going up faster than the red line, that also suggests more strength with the short-term trend. Then we look at those stocks inside of the S&P that are above their 20-day moving averages, and we're getting a really high reading now. We get a little bit concerned when it gets this high because sometimes this can mark a top in the market, but we could also go higher from where we're at right now. This is another look at that same study. This, when we get above 70, this just shows that there's good short-term momentum to the upside, and that's what we're seeing right now. And then I look at a short-term rainbow going from 10 periods up to 50 periods with simple moving averages. And even though we pulled back, we've been able to come back out up through the rainbow, and all the lines are now going back up. This is another confirmation that the short-term trend is positive. Then we do that same kind of analysis with the 50 period moving average, and that's what I use for intermediate term. We're above the red line and the blue line, so the intermediate term trend is positive. I don't have any other 50 period moving average charts because I'm dealing with the short term 20 period moving average charts right now. Here is a chart of all the different moving averages that I plot, both simple and exponential. Price is above all of the lines, and all of the lines are going up. Then we look at the McClellan oscillator, which is gives us some insight as to what's happening internally in a short and intermediate term basis with the S&P. We came up to a very high reading. We're actually coming down a little bit here. So we want to keep an eye on that. But we're still positive with this because we're above zero. Now, when this is above zero, the summation index, which is longer term, more intermediate to somewhat long term, we're going up based on price and volume here. So that's positive. Now, you could pick this out and say, well, look at the S&P. It's going up and setting new all-time highs. We're not setting all-time highs here with the summation index, so that is a bit of a negative divergence. So longer term, we want to keep an eye on this. We want these lines to continue to go up, get above these red lines, and actually become more positive than they are now. What I'm focusing on in the short term is just the fact that both of these lines are going up. Then we look at a broader market measure of the McClellan oscillator where we analyze the NYSE and we're above zero and going up there. So we're positive. So the summation index going up based on price and volume. Yeah, a little bit of a negative divergence here because we're setting all-time highs with the S&P. We're right around all-time highs with the NYSE, but we're not seeing all-time high readings here. Now, you could also take that and turn it a little different way, meaning that, okay, we're at an all-time high with the S&P. That just gives us more room to run with these other indicators before they get too far extreme. Parabolic SER. This really is easy to interpret. If the dots are underneath, we're positive, which is what we see now. At times when the dots are on top, that is more negative. There's really no ambiguity with this chart. And then we look at the bullish percent index. And I like this because this is based on point and figure buy or sell signals. And this is based on the S&P 500. And we're getting a really good reading now. We're going up, but we're getting above this green line. Other times, when we get up to a really high reading, that can often mark a top with the S&P. But we still could have more room to go to the upside. But we want to keep an eye on this. But for right now, it's positive. Then we look at the NYSE bullish percent index, also going up and not necessarily extreme. We are getting a little extreme with the NASDAQ 100 bullish percent index. But again, this could still go up much higher than where it's at right now if we remain positive. We just get into this area where we're a little bit concerned about this and we tend to watch it closer. Then we look at the cumulative advanced decline line for the S&P based on price, setting an all-time high. We also are pretty near setting an all-time high based on volume. Then we look at growth to value ratios. Now we're a little bit concerned about this first chart. The Qs to S&P actually dropping below the moving average. Where we're more positive right now is discretionary to the S&P. It's really outperforming, and that's another growth area. This includes Tesla, Amazon, companies like that. And so we like that this is really doing well. We're a little bit concerned by the third chart where we have large cap growth versus large cap value. We want this chart to be above the moving average and the moving average to go up. And we're improving a little bit here, but we're still below the moving average. Then we look at large cap growth to value, still below the moving average. Where we're seeing an improvement, even though some recent weakness, is when we look at mid cap growth to value and small cap growth to value. We're still above advancing moving averages as folks are trying to determine are the small caps going to be the place to be as we finish out 2024 and go into 2025. Then we look at an end of day chart here with the growth to value ratio for the S&P. Now this is still positive because we are in an uptrend. The blue line is above the red line. We're not really breaking out right now. We would like this to be doing better than it is, but it's still positive when you look at the whole chart. Large cap growth, not setting an all-time high, but still looking pretty good by itself. This is what's really been improving. Discretionary to staples. Again, discretionary, the things that make life fun. Staples, the things that you have to have, like toilet paper and toothpaste. We've been really coming back with a vengeance here with the staples. But when you look at the ratio between the two, this going up is more positive for the market. And this is positive because we're going up. This is a trend channel going back to 2009, but we're getting to the top end of this. Now, we broke above this one back in 2021 when the market just kept going up and up and up. Unfortunately, that led us into 2022, but we just want to keep an eye on this. This may end up providing some kind of overhead resistance. We keep an eye on the VIX, which has been dropping as the S&P has been going up. So we're going down with the line chart, which is the closing value. We're also declining with the bar chart, which is the open, high, low, close for that particular day. The momentum for the VIX continues to be down. I use the MACD to measure that, and that's more positive for stocks. Yeah, we look at the broad market where the cumulative advanced decline line for the NYSE setting an all-time high. That's positive, and that's not just the S&P, that's the whole NYSE. We're also setting another all-time high here with the advanced decline line for the NYSE. And then this advanced decline line setting a new all-time high, and this is calculated in a slightly different way. So we see that as confirmation. And we use the NYSE and just look at common stock based on price, not quite back to an all-time high. We are setting an all-time high based on volume. So we're seeing volume actually leading price just a little bit, which could be positive. And we look at the advanced decline line across multiple indexes here, coming back up, but not setting an all-time high with the NYSE common stock. We are setting an all-time high with the S&P, kind of flattening out, but still positive with the mid caps and the small caps. And then we did set a new all-time high with the equal weight version of the S&P, but it's not been confirmed yet, although we did have a recent all-time high with the QQQ equal weight. A real confirmation would be we're setting an all-time high with the S&P and the QQQs at the same time. Sometimes there can be a lag between the days when this happens. The Wilshire 5000, a broad market measure, set an all-time high on Friday. The total U.S. stock ETF also setting a new all-time high. The Dow set an all-time high and is looking positive. The Nasdaq. Now you notice this dashed line here. We've had a really difficult time. These are pivot points. These are calculated, and we know these levels before the market even hits this. They're on the chart before we get there for that particular date. We've been having trouble really getting above this level for the NASDAQ. And you'll see the next chart, we've been having trouble with the NASDAQ 100. Now, we're going to be coming into a new month now where we have some new points here. But just because we're beyond this doesn't mean this resistance necessarily goes away. It's going to be more positive for the market if we can break above this with the NASDAQ and ultimately set a new all-time high. And we're seeing kind of that same thing here with the NASDAQ 100. A real difficult time getting above this pivot point after we had been able to get above it. This was right after the election, then the pullback. Now we're just kind of chopping sideways. And we want the NASDAQ 100 to do well because that'll help the S&P 500 to do well as well. All right, then small caps. They were up slightly. The hope is that they're finally going to break out and continue to go up, where a year ago, we saw them really running up nice, give back. Running up nice, give back. Running up nice, giving back. Is it for real this time, or are we going to give back more before we try to shoot higher with the small caps? This is another small cap index, the Russell 2000. Looking good here with the RSI. Not quite extreme, a little below 70. Looking good with the trend. The 50 is above the 200, and we're also positive with the momentum. Mid caps kind of chopping sideways right now, but still looking pretty solid for the most part. Financial sector just setting another new all-time high. We watch this in case there's any kind of another financial crisis like we saw from the late 2007 into 2008. So far, this chart is not telling us that there are any problems in the financial sector. The FANG index, not at an all-time high. These are the gargantuan stocks, the Facebook, Apple, Amazon, Netflix, Google, Nvidia. We want this to do better. That would help the NASDAQ 100, and it would also help the S&P 500. Now, this is still positive, but we're not seeing the strength that we saw last summer back here when that was really what was leading the market higher. And we saw the pullback. Here was August 5th when the end of the world was supposedly happening. But we are doing okay here, but we would like to see this doing better. In fact, I have a couple of trend lines here. We've been having a hard time getting above this short-term trend line, but when we pull back, we've been holding above this longer-term trend line. So I'll be watching that as well. Then we look at a ratio between the Nasdaq 100 and the Dow, and this ratio is holding up for the most part right now. A weekly chart of the Nasdaq 100 still above this trend line going back to 2009. And I've had this on the positive side here because the 10-year yield has been coming down. If that continues to fall, that will give more support to stocks to go up. And then we look at what could be considered, are we anticipating a soft landing, meaning no recession, or a hard landing, meaning that we will go into a recession? The market is still anticipating a soft landing here. And we look at growth to value. These are a couple of ETFs. We would like this to do better, but it's still positive. But we're inside of the rainbow right now. We want this to keep going up, and that would give more support to the S&P to go up. Now we look at the negative side here, where, okay, it could be taken as positive because both the red line and the blue line are going up. But when we're more positive with this chart is when we see the blue line above the red line. Right now, the red line is above the blue line. And this is an intraday chart of large cap growth versus large cap value. We also look at an S&P growth to value ratio intraday where we kind of bottomed right around Halloween and we're looking pretty solid here. Then we started to see some weakness. Now, this has been declining overall, but we have been seeing over the last couple of trading sessions this beginning to bounce back up. If this would continue to go up, that would be more positive. But the overall context is that we've been declining with this ratio. And the Swenlin trading oscillator, it's positive since we're above zero based on price and volume, but we're rolling over here with both price and volume. Sometimes this chart gives us a heads up before things are actually played out with the index itself. That's why it's on the negative side. We are positive, but since we're rolling over and we're seeing both price and volume going down, that's a little bit of a concern to us. And this is positive too. When you look at all these oscillators, we're positive, except for one, the slope oscillator, the very top one. This is a short-term oscillator that's actually starting to roll over and cross below its moving average. So these other oscillators are doing okay, but this is why I have this set of indicators on the negative side is because of the slope oscillator. And we're negative with the Copic curve. This is another momentum oscillator. It's actually dropping below its moving average and declining. I've been focused on this for the last number of weeks. This is a ratio between the semiconductors, which have been under pressure lately due to restrictions for them being able to do business in China. Well, we saw a little bit of improvement later this past week when some of those restrictions may be lifted from them. But we want to see more follow through. We have the Dow setting an all-time high, but semiconductors are actually in a downtrend right now, and that's why we're seeing this ratio going down. If this continues to fall, that's going to be more negative. If we can turn and start to go back up with this ratio, that would be more positive. And these are the semiconductors where you can see we've seen a recent death cross here, and some of that may be due to the regulations that I talked about. But you can see this is a huge part of the stock market, a huge part of tech, and tech is a huge part of the overall market. We want the semiconductors to be in an uptrend. They're actually below both the moving averages here and starting to see a death cross. Now, we could get that back. We could see a real improvement here and getting back above the moving averages and actually turn back and look more positive. But that's all speculation at this point. Right now, we can just go with what we see, and we are seeing things a little more negative, and it's a bit of a cause for a concern. And the momentum for the Nasdaq 100, as measured by the PPO, another momentum oscillator, continues to be below its moving average and is declining. And even though we're showing an improvement here when we look at small cap growth to value, it's really been bouncing up lately, we're still in a longer term downtrend. And we see that same thing with the mid caps, improving, but a longer term downtrend. And then we look at the Qs, the NASDAQ 100 to small caps. We've been hanging out around this level, and it's not necessarily falling apart yet, but we are declining with this. And just to give you a little bit of perspective, this is what happened back in 2000. We saw this ratio get a very high reading, and then we went into the dot-com bust. Now, The fundamentals are different in the market right now. There's a lot of different things happening, but we could always change over into a more negative environment. But the fact that this is coming down is more negative. If we were to turn and go back up, that would be more positive. And we're concerned about Microsoft. It is generating a death cross right now. Now it's kind of sideways and it could get that back, but we're not seeing any real leadership right now. It's been chopping sideways over the last number of months. If we continue to fall with Microsoft, that will be more negative for the market. If we could bounce back up, that would be more positive. And here is the same chart in case you didn't get it last time with the semiconductors to Dow ratio. And then these are things that I'm watching. And then in Thursday's session, we're going to get weekly jobless claims. They've been declining, and that's showing that the employment situation is strong. But when we look at the next chart, the continuing claims, so folks aren't getting unemployed, but the folks that are being unemployed are staying unemployed longer. And we're seeing the continuing claims go up, both with the raw score that we see and with the moving average. That's a little bit of a concern to us. And we have the skew index, which is giving us a very high reading, and it's been doing it for about a week now. This is a variation of the VIX, and it's calculated in a little different way. But when we get up into this red area, the market is expecting some kind of a big move. Now, some people think it automatically means we're going to go down. Other people think it's automatically going to go up. But you can see other times when we spiked, there's really no conclusion that we can reach. So we have to look at this, and I just put it on the watch list, and then we use other charts to actually give us the context. And small caps, yeah, they've been improving when you compare them to the S&P, but they're still in a downtrend. We're going to be watching this. If we see the small caps continue to improve, are we going to see a golden cross here with this ratio? And then the tech sector, and I'm watching this because it's not falling apart, but it's not really showing any leadership right now either. We would like the tech to 3 to 7 year bond ratio keep going up and get above this rainbow and see the lines keep going up as well. And they're just lagging right now. And then we see that same thing with the QQQs, the Nasdaq 100 to 3 to 7 year bonds, not falling apart, not looking negative, but not showing any leadership right now. And we want to keep an eye on oil. Now there's supposed to be a ceasefire going on in the Middle East, but then parts of that, each side is accusing the other of breaking the ceasefire, so we'll have to see how that plays out. But we do watch this because if things really escalate in the Middle East and oil really shoots up, that could really have a negative impact on stocks. And we want to keep an eye on the dollar, which I pointed out in other videos. It's like, okay, we've been really going up. And now that we've been going up really strong with the dollar index, we see a golden cross here and then it starts to decline. And that's one of the drawbacks of using moving averages is you can see we were really going down, death cross here, then we bounce back up. Golden cross, drop. Okay. That's just one of the bad things because moving averages lag. But we have been pulling back a little bit with the dollar, which would actually be more beneficial for stocks. But the dollar going up could be positive because that means that the currency is valued better than the currency of other countries. And then we have this thing called the Hindenburg Omen. And if you're not familiar with that and you're having trouble sleeping, you can read through this and you'll be out quick because it's not necessarily exciting. What I look at here, what stockcharts.com does is they take all the criteria here that you see in bold, 1, 2, and 3, and they cram it into one indicator overall. And we had one of these spikes. The perma bears love this thing, which is why I ignored this chart for a long time because I'm not a perma bear. I like to consider myself a perma realist. But at least the couple of perma bears that I follow, they're like salivating right now, saying that this is for real, baby. Well, according to the textbook definition, we have to see another spike either on or before December 19th. If that doesn't happen, then this spike is invalidated. Now, the reason why we pay attention to this is we saw this right before the COVID crash. We saw this right at the end of 2021. Now we're coming into the end of 2024. And yes, I'm hearing rumblings out there that the end of 2024 is really similar to 2021. We don't know. We just look at all these charts. That's why I look at so many different charts to reach a consensus with all of this. And then we'll just evaluate things day by day to see if they are turning into what we saw going into 2022. So thank you. I hope you had a good holiday weekend and your weekend continues to be good, and I will talk to you in the next video.